Wheat is heading for its biggest weekly drop in 2 years, down about 7% on the week. Joining us from the CME is Oliver Sloup of Blue Line Futures. Oliver, I do want to start with wheat because I'm looking at this chart today and I see we're scraping just below that 50-day moving average. And I'm wondering how much worse can this really get for wheat and some of these other grains?
Well, I think it could get a lot worse, especially for wheat. We had a nice big rally back in July, and a lot of that was on the back of production concerns. We had hot and dry weather in Europe, Australia, and the Black Sea region. But the other part of the equation is supply and demand, in which we have excess supply, and the demand has been relatively dismal. So you've seen the wheat market come off considerably, and as you had mentioned, now resting on some very significant support. 540 for December contract is what we're looking at. Represents the 50 and 100-day moving average, as well as the 50% retracement, or basically the middle of the range on the year, as well as the original breakout point from July 25th. So the funds have a net long position right now. If we finish the week with a conviction close below technical support, I think that triggers some long liquidation and accelerates the selling pressure. And really, with time, I wouldn't be surprised to see wheat back below $5.
All right, corn also below that 50-day moving average. So I'm wondering, where's the level of support there?
Well, there's not really a whole lot until that 350 level. That was near the contract lows and is obviously very psychologically significant. We've seen a lot of pressure here this week. We've had crop tours going on throughout the Midwest, basically confirming what the USDA told us back on August 10th, and that is that we have a big crop coming down the pipeline with bigger yields and potentially record yields for a lot of areas. So we've kind of rolled over, and there just hasn't been any bullish headlines as of late to get these funds with a net short position to start to cover. So I wouldn't be surprised to see a little bit more pressure in corn. 350 going to be a big battleground area between the bulls and the bears.
All right. Well, one of the worst years we're having right now is in the hog space. And when I look at that and I think about the trade wars we're in and the fact that, two of the biggest importers of U.S. pork we're basically at odds with right now. What do you see as the outlook for that market there? And how exactly do you play that and protect yourself in this sort of trade environment?
Well, we work with a lot of producers in the agricultural space, and as you had mentioned, we rolled over very hard. We got a little bit of a silver lining last week on the potential outbreak of swine flu in China, which propped up the market, but I think we got a little bit overexcited about the potential scare cutting back supply. So we saw the prices rally pretty hard, coming back into a little bit more of a range. I wouldn't be surprised to see more pressure here in the near term. The front month contract, October, supply concerns continue to be very heavy on this market, so that's what we're looking at. If swine flu does escalate overseas, I think that puts the deferred months at an advantage for a big rally.